The Malaysian property market is expected to sustain its growth, helmed by the country's strong economy. Group Chief Executive Officer of All Property Media Private Limited, Steve Melhuish, said, though at a slow pace, property prices will still expected to grow.
We are sort of predicting around about 7 to 8% growth this year in 2011. I've seen predictions of up to 20% growth, which I just don't see happening because we've seen over the last sort of 6 months or so the transaction volumes slightly coming off month on month, and the price growth is starting to slow down a little bit.
Steve said based on the company's property portal in Malaysia, HomeGuru.com.my, more and more people were starting to show interest in property investment, not just locally but also globally, looking at it as an important asset to invest in. High liquidity and relatively low interest rates attract people to invest in the local property market. He said the property market in Malaysia had shown a steady annual growth in the last 10 years, 3 to 5% on average, despite being affected by the global financial crisis in 2008 and 2009. Apart from strong economic factors, he said the steady growth was also driven by the growing population in Malaysia, which increased about 20 to 30% in every 10 years. Steve, however, said the market was still vulnerable to the global economic issues, such as the big European debt crisis, which could have an impact on the Malaysian economic environment, particularly in the next couple of years.